The week brought bold moves across commodities, but is the momentum real or just smoke in the charts? Welcome to Weekly Commodities by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Tonight's spotlight. Gold is visually unstoppable, but is this rally statistically stretched beyond reason? Silver faces a two-front battle. Next week's closure and the monthly finale could shape its fate. Oil bounced, but is it a rally or just a dead cat jump? Exxon, Chevron, Conoco. If you can't handle brutal candle and statistical calls, skip this session. Uranium. A powerful reversal might be loading. We analyze energy fuels and chemical. GDX. Is a diagonal forming, or are the charts deceiving us again? Watch our live Elliott Wave breakdown. And before we dive in, we are announcing a special 80% discount for new members only on our Ultimate package. Full access to all analytics and the private Discord room, excluding live trading room and signals. Use code LONG, all capital, at checkout. This offer won't last long. And today we start with gold. This is the candle closure. Technically, from the candle perspective, nothing is concerning at this moment. The daily closed with a potential continuation candle. The same applies to the 2-day chart, and the weekly technically placed a healthy bullish continuation candle. The only concern across all the frames is that they're grossly oversold, and the RSI and the other signals are extremely high. If we look at the Elliott waves, there is a possibility, so the wave down has been corrective, and right now there is a possibility that this is just a flag for wave 4, and based on several estimates by Fibonacci levels and the candles and the wave structure, I would expect the next move to be somewhere here. And let me put the most probable targets. So this would be between 3.3393 and 3408. So the overlap of these two targets. However, a move lower or a bit higher is absolutely normal here. Well, the ideal target is 3408. Well, that's the perspective for the next week, perhaps for just the next couple of days. And now let's have a look at GDX. I have something concerning here. The first thing that we already discussed it multiple times is the structure of this wave. We have 4 gaps in one wave, and 3 of them were consecutive, and the final one is just an extreme stretch. We are seeing the daily candle is entirely above Bollinger Bands, and we have a bearish Harami cross here, which can turn into something much bigger. I'd like to remind that when the crosses and the Haramis are confirmed, there is a possibility of a higher high before everything gets lower. But this is not the main point of this discussion. So this is something I wanted to show you though. This is 1 month chart. You can see that the monthly candle closed above Bollinger Bands, but it's not extremely critical. What I'd like to show you is the 4 months frame. This is a 4 months frame, which is closing in 12 days. And we are seeing an extreme push above the standard Bollinger Bands. But this, if we change it to the 3 standard deviation, we still see that this candle is above Bollinger Band. And from statistical perspective, trading above 3 standard deviation has the probability of 0.15%. So it means that the opposing forces are extremely high, and the move has been extremely overstretched, and right now we have a very good chance for a sharp decline. Something that we saw in 2011 or something that we saw in 2020, in year 2020. Well, how big this move would be, it's difficult to forecast at this point. However, if we are looking for just a very sharp, very ballpark estimate, I would say that the price would need to return to at least eight periods EMA. This would be a very ballpark estimate. And now we need to see how it closes the month. So, but nevertheless, trading above 3 standard deviation is a very strong statistical reversal signal. Well, that's the perspective for gold, for GOD. Now let's move on to the next topic, which is silver. If we look at the silver candles, so they are quite different from the ones that gold is showing us. So first of all, the daily, technically it formed a bottom here, and right now it's slowly pushing it higher. However, if we look at the bigger frame and let's say we start with 3-day frame, we are seeing that there is a possibility of, first of all, it's a very strong confirmation of a top. This was the red candle, and now we are seeing 3 candles which are technically can be an advanced block. You see that each candle is smaller than the previous one, and the upper one has a very big upper shadow. So the chances for reversal here are significant, especially if we consider several technical signals. The same situation is on the weekly frame. So this huge bearish engulfing is not reversed, and these 2 candles are not sufficient to turn the odds from bearish to bullish. The same thing happened on the 10-day frame, and it's amazing to see how these are moving in parallel. So while daily candles were forming a bullish trend, the 10-day frame is piling with bearish candles, and the closure of the 10-day frame will be next week. And another candle here that was just recently formed, it was a dark cloud. It was a technically harami, which is also a potential hammer for the 15-day frame, but we need to see a confirmation here. A very dangerous candle right now is on the monthly frame. If it closes as a dark cloud cover or even as bearish engulfing, it would be a strong signal for a move down. Let's see how it completes the month. That will be the main focus for the next 2 weeks. If we look at the Elliott Waves, no changes to our previous estimates. So there are 2 potential paths on the table. The blue one, which is the possibility of A, B, C correction and a continued move up, or this is a possible 1-2 setup for a much bigger wave down. So far, the wave down has been impulsive, and the wave up is not exactly impulsive. There are more corrective qualities here. And if we look at the smaller frame, this is another chart that we've been sharing for a while, starting in April 10, and earlier we outlined this target. So silver surpassed this target right now, but the wave, this particular wave is not exactly which I would take for an impulsive one. Let's see how it develops, and there are 2 main possibilities here. The first is the green one, 1, 2, 3, 4. Wave 4 would be somewhere here, and potentially wave 5. Or if the silver breaks below the 30.791, it will definitely break the impulsive structure, and we would be looking for either red or purple count, and the chances for a move down would increase significantly. So I would say once it breaks through this level, the bearish odds will increase. And now let's have a look at SLV. SLV Trust, the same situation as for the silver. I would say that the daily closure was kind of dangerous. First of all, it closed the gap here, and this candle could be a confirmation of reversal on a spinning top. But I would like to see a much more powerful move, and the next couple of days will be very critical for that. A very similar situation with the weekly frame, so it wasn't able to negate this big red candle. And now we might be looking for another green candle even smaller than these two before silver moves down. And the next week we have a very critical closure, 15-day frame, which is closing on Tuesday. If it closes below this level of the green candle low, it's 29.58. Let me put it here. 958, so that you have it. 29.58. A closure below this level on Tuesday would mean a strong inside down candle, an equivalent of bearish engulfing, with all the consequences. So the next 15 days would likely be bearish. That's all I wanted to say about silver. Now let's move on to the next one, and this is oil. Speaking about oil, we have dilemma here. First of all, the daily rally and the 2-day rally, they were not quite significant. And first of all, I'd like to say that there is still, the bottom is not formed yet because of this little doji here, this green doji, and so far oil failed to close above the high of this doji, making it technically bearish even on the daily frame. The same situation happens on the 2-day frame, which is again failed to close above this level in order to reverse the candle. And well, that's surprising. It's just a few basis points below. It would be nice if it made it, but unfortunately, this is what is happening. And the same situation, absolutely the same situation on the weekly frame. We can see that it is closing in 20 seconds as we speak. It is closing below this level. And now we have to look at the bigger candles and the bigger perspectives. So this is the monthly candle right now. It is huge bearish continuation candle, which technically will continue the ride down. For oil to make a bullish candle, it needs to rally about 13% in the remaining 12 days, which is it is possible, but it would be quite challenging, I would say. Let's see if it makes it. Anything lower than this, it would be bearish, but with various degree of bearishness. Now let's have a look at Elliott Waves. This is the chart that we've been tracking for a while, since April 8th, when we outlined this potential path after the first impulse down. And what is happening right now, we were tracking until recently 2 potential paths. Now we can clearly remove the blue one because it's been invalidated, and the red one is becoming the potential primary. So that's the path, and I think that oil could be forming an ending diagonal here, but it's this is just a ballpark estimate. We need to see a stronger and more mature wave. So this is a possibility, but wave C could have ended here as well. Let's see how it develops. And this red rectangle here is the most typical target for the move based on 2 Fibonacci estimates. However, falling short would technically be a truncation of this corrective wave. Well, now let's move on to the next chart. So this is our longer term chart that we have been tracking for a while, since beginning of April and even earlier if you followed our videos daily and weekly. And this is, right now it remains unchanged. There is nothing that I would like to add at this point. So we are potentially looking for an impulsive wave 3. However, it could be a different structure. Let's see how it develops. So it's not moving very fast. The next wave, or the next chart that I would like to discuss is the technical one for the future, for the oil futures, CL. And this is a very concerning development that is happening right now in front of our eyes. This is the 4 months chart and 4 months candle. It is potentially closing as a bearish candle, and if nothing really fundamental from bull's perspective happens in the remaining days of this month, we will have a recorded MACD bearish cross on the 4 months frame, which previously happened only 4 times, and an average decline for oil following this cross would be somewhere between 50 and 70%. Oh, 50% it's already done. That means 77%, which would be an average decline for this type of move. And I placed a target here, rectangle, for my expectations. So somewhere between 50 and 30. This is based on statistical estimates. Again, if this cross is formed. And now let's move on to the next one. This is just a secondary opinion, if you will. This is Brent chart, and this is another 4 months candle. Very telling one. And if Brent thinks about reversing its fate, it needs to rally about 15% in the remaining April days, which is possible, but probability of it, I would say, rather low at the moment. And the final 3 items that I would like to discuss in the oil section is the technical analysis of ExxonMobil, Chevron, and ConocoPhillips. Let's start with Exxon. So this is the 2 months frame, and right now Exxon is on track to forming a bearish continuation candle. But not only that, it is also on track to reconfirm its break, its bearish cross on the MACD on a 2 months frame. And by the way, if it happens, it will be a record. It will be of a record magnitude. So far, the chances for moving lower for Exxon are quite high. And so now let's move on and have a look at Chevron. I think Chevron has an even bigger cross here. Yes, that's right. 4 months candle, 4 months candle chart, and we are looking for a freshly made, well, it's not recorded yet. It will be recorded on April 30th. but if it does, it will be a very strong one. And if we just do some quick calculation, let's say for the last 3 crosses, this is what happened with Chevron. This cross in 2008 led to 46% decline. The cross in 2015 about 49%, and the most recent one here in the year 2020, we were looking for a bigger 62%. So technically, if we have a cross right here, we should be looking for at least 55% on average decline. So let's try to measure it here. So 55 would be somewhere here. Well, and let's switch to another chart. Let's say two months for an easy measure. So 55%, it would be somewhere on this support line, which is 200 months. This is for the 400 months moving average, because this is 2 months chart. And this is something that we would be looking for Chevron. The perspective is quite gloomy, and from the current level, it would be another 40% drop. Well, that's the perspective. This is the statistical perspective, and I would like to clarify we need still to see a very strong cross here, which would be both rare and very significant. And speaking about Conoco, Phillips, pretty much the same situation. The only thing that we have a much stronger candle formation for Conoco. If it happens here, it will be very much the same move, and I'd like to say that if it closes like this, I would consider this candle formation as a 3 black crowns on the 4 months frame, which is way too significant. If we are looking for this one, it would be probably, again, we would be looking for support at the 400 months moving average, which would be a decline of about 65% of the top in November 2022. So that's the statistical perspective for 3 oil giants, and let's see how it forms after the closure in April. Now let's move on to the next. But before we move to the next one, I'd like to announce a new member offer, which is 80% discount for the first months for the ultimate package. It will give you full access to market analytics for all articles and Discord setup. However, it will exclude live trading room and signals. Use the code LONG, L-O-N-G, all capitals, and the offer ends on Monday at 11:59 p.m. and it is valid only for the first 20 subscribers at investingangles.com. Now let's move on to the next chart, which is uranium. What we are seeing here, we could be looking for a reversal. I would like to say that Energy Fuels made a very strong move on Tuesday, and it was a bearish move, but an even stronger bullish move the next day, and we can see that the move upward is continued. So far the candles are bullish, and there is a good chance that we might see a continuation. Particularly interesting is the weekly candles. So this is the confirmation of a move of a bottom on the weekly frame, and the chances for moving higher are fairly significant. If we look at the bigger frame, for example, there is a very interesting formation here, and I would say that if Energy Fuels pushes a little higher, it could make a bullish engulfing. But at this point, it is a piercing line, which is a bullish reversal candle. There is a very good chance for closing the months with bullish engulfing and the 2 months with the piercing line. Let's hope. Now let's have a look at the chart. This is what we were expecting last time we discussed, but uranium's move was even more powerful, and I would say that it extended initial wave upward to almost 4 Fibonacci levels. Wow, that's amazing move. We have a very clean wave 3 here, and now the concerning part is that we have an ending diagonal. Most likely we have an ending diagonal for wave 5, but this is not a very big concern because this is wave 5, this is not wave 1. And technically right now we might see a very sharp decline, maybe a sharp zigzag for wave 2, which will be we will be targeting this level, approximately this level, and it would look like this. So this would be wave A, B, C potentially. Now let's change the color here. This would be wave, and I think it's a different, yes, this one. So we would be looking for a sharp zigzag potentially for a couple of days, and another wave upward, wave 3, which would be even more powerful than the very first one. And the candles right now would support this particular move, especially the monthly and the bigger ones. So that's the perspective. And now let's have a look at the Cameco Corporation. What we are seeing here is that we have a daily reversal here, although it requires a bit more power. On a 3-day, we have a bullish reversal and the 2 opposing candles. And on the weekly frame, we have also a bullish engulfing, which wasn't negated. Now, the chances maybe for another week to develop another opposing candle and then move higher. The monthly closure will be critical. There is a possibility of forming a bullish Harami candle here if it stays like this or moves a little higher. On the 2 months frame, there is a possibility of a failure. So this is green candle, it's still in effect, and we have a three candles, which would be an advance, not an advanced block, it would be a deliberation pattern here, potentially setting for rising 3 methods to move it even higher. Well, that's a good perspective. Again, a very critical closure on the monthly frame. And speaking about the chart, this is what we've been talking about since the middle of the March. There's a possibility of an ABC formation. This could be the end of it, and we might see a move higher. However, there is a possibility of wave B as well. So far, this wave is not been very impulsive, I would say. Let's see how it develops. And there is a still possibility of another wave lower, but it can change with the monthly closure. I would say we need to very closely monitor it. Perhaps there is a very good chance. And the final discussion today would be about the miners ETF, GDX. If we look at the candles perspective, so far the miners are somewhat neutral. There is a possibility of a topping formation on the daily frame. The weekly frame so far being bullish, and we cannot say it's going to be bearish until we see a very clean and strong reversal here. 8-day frame, it's bullish. However, I'd like to say that it went a little bit too far, and now it might need to pull back. The most interesting chart here is the Elliott Wave. So this is the chart that we shared with our subscribers back in April, saying there is a potential for an ending diagonal. And it is indeed a risk right now. So if this wave is wave 5 and we can see a move breaking through this level, this one, let me mark it here. This is 36.26. 36.26, the coordinate. All right, so breaking through this level will keep the blue count on the table, and we would be looking for this type of move. If, however, GDX gets support at this level and bounces higher, we would be looking for a slightly different formation. And let me mark it. So it would be wave 1, 2. This potentially would be wave 3. Somewhere here, wave 4. And I would be looking for wave 5 to go up here. And this would be a different channel. We would be looking for this type of channel. Okay, so this would be a green one, and this would be potentially the bigger one. They need to extend it just to make it clearer. So this would be wave 4 for the green one, and this, I am changing this to the blue one so that it's not confuses us. So there is a possibility of ending diagonal with this wave 5 and moving back to 21.52, or there is a possibility for wave 4. In both cases, we might have a very strong decline here, with wave 5 going somewhere there. So that's perspective. Once we know that this is the end of wave 3 here, and it looks like it's getting closer to it technically, we might be able to measure the decline for wave 4 more accurately. So far, these are two perspectives, and let's keep our fingers crossed that it doesn't cross 36.26. All right, so let's wrap it up. This week in commodities, the signs are subtle, but significant. Gold is glowing on the surface, but overextended underneath. Silver is entering a crossroads, and next week, and especially the week after, may seal the outcome. Oil continues to tease direction, but big oil stocks are already pointing lower. Uranium is flashing early signs of a powerful reversal. At GDX, one way from answering the diagonal question. If you are done trading on headlines and want to chart with structure, timing, and statistical edge, now is the moment. Join investingangles.com and claim our exclusive offer. 80% off your first month of the ultimate package. Full access to all analytics and our private Discord, including live trading room and signals. Only for the first 20 customers, and offer ends on Monday at 11:59 p.m. Use code LONG, L-O-N-G, all capitals at checkout. For daily high conviction setups, join our private Discord where Master Trader Kyle posts surgical entries and exits straight from the charts. Like, share, and subscribe, and hit that bell because timing is everything and the turn waits for no one. If you watched before and came back, you are clearly serious. Subscribe if you haven't. And if you are subscribed, hit the bell. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.